Hello friends, welcome to the Professor Bookshare Stockology Club. Now, as a finance professor who has an experience over more than 2 decades, I think it is my moral responsibility to aware the common investors or investor community at large to aware about the reason behind the current, the rough phase that is going on. Now, especially after the Trump came into the power, it is observed that the current turmoil has increased manifold. Now, what are the relationship? What are the reasons behind it? Now, the financial instrument across the world, they are interrelated. If there is in one instrument that is in US, if something happening, the impact we found in India also. So therefore, would like to, it is an effort to discuss about what is the relationship among the different financial instrument and what is the dynamics of these financial instruments. So as you know that April 2nd, President Trump has declared a new tariff that will be imposed on their trading partners. So, what is the impact on the US market as well as on Indian market we have observed? That we will discuss in this video. Now, the previous week we have observed that there was a roller coaster ride, but before that, the last week we have observed a rally in the current market trend. Okay, so what happened exactly in the current week? That there was a roller coaster ride in the prices. So let's try to uncover the truth, the reason behind it in this video. I think you will stay tuned till the end of this video. Now, US Treasury Bond, 10-year US Treasury Bond, it is considered to be one of the safest instrument across the world. So investors, they invest, though big investor like the FII, they also invest in this instrument. Now, the yield on this 10-year US Treasury Bond, the yield of this instrument and how it impacted our market or the Nifty 50. Let's try to understand that with the help of this graph. Okay, let me share my screen. So, so the screen, if you see that screen, this is the this blue line. It is showing the US 10-year Treasury bond yield line. Okay, and this red line, it is showing the Nifty 50 line. Okay, now we are trying to show you that how these two instruments are interconnected, and whatever current tough phase or the bear phase that we are passing through, what is the reason behind it? What was the impact of 10-year government bond, US Treasury bond yield on our Nifty 50? So let's go back to the starting point of the bear phase. That was on September, to be precise, it is September 26, 2024. So this is the line on which actually the Indian market or the Nifty 50 has gone to the top. Let's have a look. Okay. So this is this line it is showing on the September 26, 24. Now after that, if you observe this 10-year bond yield line, okay, US bond yield line, that is the blue line, it is started to increase. Okay. And this red line that is showing the Nifty 50, it is continued to decline. Okay. So the point I am trying to say is that since because of this increasing trend of this US Treasury bond yield, the FII, they pull out their fund from Indian market and put it in the US market. Therefore, during this phase from 26 September till 21st Jan, you see this trend continues. Okay. So the FII, that is why that market got crashed because of this reason, that FII are pulling out their fund from our market and they're putting in that US market. So this is one important phase, that bear phase that is started on September 26. Now look at the second important vertical line, that is the Jan 21st. Okay, so here you are, before the Jan 21st, you observe that these Nifty 50s continue to decline, and this blue line, that is the this US Treasury bond line, it is increasing. That means when there is an increase or hike in that US Treasury bond yield, actually it impact negatively the Nifty 50 or our market. Okay. Now there is another important day, that is the 21st Jan. So you must know that on Jan 20th, okay, President Mr. Donald Trump, he assumed the office of the president of US. Okay, after the Trump assumed office, you see the 10-year government bond yield, it has started to decline. Okay, what was the reason behind it? The market it was very uncertain. Okay, the whole world market, or especially the US market, they are very uncertain. Okay, now this, after the Trump assumed office, this, you see the 10-year treasury bond yield, it is continued to decline. And Indian market, if you see the red line during this Jan 21st to the 2nd April, during this phase, if you observe, the US Treasury bond is trying to decline. Okay, and our market, it has regained. Okay, what was the declining phase? So in that phase, that somehow it is reversed during this time. So whenever there is a decline in the US Treasury bond yield, our market react positively. Okay. Now this is an important day, that is the April 2nd. Okay. On April 2nd, Donald Trump announced that Liberation Day, and the tariff will be imposed on all the trading partners with whom it has a trade deficit. Okay. Now, immediately after this announcement, the investors got panicked. Okay. They are not sure. They are completely unsure about what will be the possible impact on the economic growth. Okay. So therefore, they got panicked and started to sell the most safest asset, okay, in the world, that is the US Treasury bond. Okay. Now, if you observe, the after the April 2nd, the bond yield, okay, this line, that is the yield line, that started to increase. Now, there is a relationship between this bond yield, okay, and the bond price. Okay, we will discuss about this bond yield and the bond price, what is the relationship in detail about this bond in the later videos. Okay, so when this investor started to offload this US Treasury bond, okay, since the price has reduced, the yield has increased. Okay, so after this April 2nd, you see the US Treasury bond has increased. So since it has increased, you see, followed by this, the Indian market has declined. Okay, very harshly declined, if you see. Okay, now, so here you can see there are two important dates. So I'm just changing this price line with the candles. Now, if you observe on this day, that is the April 9, after April 2nd, April 9. So the April 9, the situation worsened. Okay, when the tariff actually, previously it was just an announcement, but from April 9th, it actually took effect. Okay, so whenever it took effect, okay, so that day, if you see, or if you observe, the yield has reduced. Okay, drastically it has reduced. So whenever the yield has reduced, the price as our market, our Nifty, has increased. While the yield has increased, yield has reduced, so the investors got some relief. Okay, whenever there is an announcement of the suspension of this for the 90 days, this tariff would be suspended. Okay, and or rather it is deferred. Okay, so market got relieved. So what happened because of this relief, that the prices has started to, the this bond price has started to increase. Okay, so whatever happened because of this increase in the bond price, the yield has decreased. Okay, drastically it has reduced. Now after April 9, if you observe the day, that is the April 10th, okay, here, so on this day, what happened? There is an important incident happened, that the 10-year bond that is sold, okay, to the extent of $39 billion, and the 30-year government, this US Treasury bond yield, it was sold to the extent of $23 billion. Okay. So again, whenever there is a sell, huge sell of the bond, the prices has started to decline. Therefore, on that day, if you see, the US Treasury bond has increased. Okay, so on these 2 days, simultaneously there was two impact. Okay, so in this video we have started to we have tried to, it is an effort, serious effort of us to show you that what are the impact of the US Treasury bond, okay, 10-year Treasury bond yield, and this possible impact on Indian market. Okay, so whatever that this current week, whatever the turmoil this happened in the market, okay, the wild movement that happened in the market, that is closely synced with, or simply because of the movement of the 10 years bond yield curve. Okay, now I think we'll love the video. So in the following video, we'll show you what is the relationship between the bond yield and the bond price and the interest expenses, okay, in detail. Okay, hope if you like this video, and there is a serious effort made by our team, especially my son, who has made an effort to make this media part of the graphics and all. Hope you will like the video, and if you liked it, and if you think that this information what is given during this presentation, it is important to you, you just please like the video and subscribe to the channel. Thank you.